Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Monday, November 15th, 2010. Well, folks, the markets, after a dramatic decline on Friday, are floating neutral to higher today. The SPY is trading up 65 cents, while the Dow is up 75 points, NASDAQ up 10, and the S&P 500 up just under 7 points on the day. Basically, a 0.5% move up in the markets after a 1.5% decline last Friday. Now, a couple things to go over technically speaking here. First off, you have to note where the market is having trouble rallying above today. If you connect the high here from the end of the day on the 10th of last week, again, November 10th, connected to or through the highs on the 11th, you're getting this exact pivot top today on the charts. And again, that's showing us that there is resistance up in this range. And again, after you hit that, you had a beautiful pullback. I think that was called out in the intraday stock chat today by my partner as a short call when he was on the microphone. And again, you can see after that, we went right back up, tested it again, and are pulling back currently. Now, the more times this level gets hit, the more likely you're going to go through. So again, if we hit it another time or the next time after that, very likely you do move through unless you don't retest it, in which case you could come down and then test this blue line. If you take out the blue line in the 20, you're going to go down to the lows of the day. Again, I don't really see a down market today. I said that to the members of the intraday stock chat today as I gave them the opening remarks this morning just before the market opened. Again, we talked about the possibilities here. Remember, the Federal Reserve is out in full force. On Friday, they had some technical difficulties with POMO, permanent open market operations. And again, that's where they're flooding the market with dollars, or essentially buying treasuries, pushing billions. And they did 7.9 billion alone today, folks. Just alone today, 7.9 billion. Unbelievable money flowing into this market. They're buying those treasuries from banks. The banks have been putting the money to work, and that's what's trying to keep this market floating higher. All right, and again, you have lots of pressure everywhere, and this is what I'd like to see, folks. We were the first ones here in the money stocks to really bring out what the Federal Reserve is doing, inflating asset prices to get the average American fooled so they go out and spend, creating a real recovery. All right, and again, ultimately, it's going to be a failing motion because, again, yes, you could get in the short term people to spend money, but once they run out of money or once they run up more debt, you just are really recreating the problem we've gone through in previous years here now over the last 2-3 years. So again, in the short run, could it have a good impact? Yeah, you're seeing, obviously you're seeing some of these economic numbers coming out. They look a lot better. Job growth is starting to inch up just a little bit, but in the long run, I do not think it will have a good effect on this market. In fact, I think it's creating a bigger bubble than the past bubbles we've had, and that's the problem. Remember, the tech bubble burst in 2000, 2001. What happens? The Federal Reserve lowers interest rates, creates a free money policy. What happens after that? It creates the next big bubble because everyone starts buying houses, money's cheap, the housing bubble collapses then, and that creates the next situation which we're in right now. The Fed is combating that not only by putting rates to zero and creating free money again, but now infusing even more money. See how each time they are curing a bubble, they're doing more and more, and it's just creating a bigger next bubble? And that's the problem here we have to remember, folks, and that's the worry that I have in this market. All right, in the short run, nice little pullback. Again, you can see the yellow line working very, very well. Again, one thing of interest, yesterday, or I should say Friday, POMO, which was, again, permanent open market operations by the Federal Reserve, it was delayed. It was supposed to start, I believe, at 11 o'clock or 11:30. It was delayed on Friday because of technical difficulties. It came in the afternoon. Look at the markets. They went sideways to up the rest of the day. It just continued today with POMO, and you can see the markets are almost being held in this sideways to up move. And again, you could take a look and just draw the line right underneath. And look at that. I mean, it's almost too perfect. The markets right now are trading in a too perfect scenario, which again tells you there is an influence here by the Federal Reserve as they continue to use the POMO to keep the markets propped up, keep commodities, or attempt to keep commodities propped up as well. Now, some interesting news of the day. Caterpillar is having a nice day today after they bought out BUCY. And again, you can see the gap down today on a technical basis. And again, my partner called this level out on Friday, folks. I want to make this clear. My partner said buy at $58. At $80 was the buy on Caterpillar. My partner pointed out last Friday. Sure enough, today it gaps just below $80 right down here. Look at the move up you got off of this great call in the intraday stock chat by my partner, Chief Market Strategist Nick Santiago. And again, all these plays in the intraday stock chat are fantastic, but the Research Center is getting just as many plays. And again, we're going to continue to push more plays out in the Research Center as the markets look like they're primed. Well, over the last couple of weeks, we accumulated some shorts in anticipation of the turn date last week. Turn date nailed. Some profits taken on Las Vegas Sands. Some other things still in, and continuing to see more downside in the future. But again, this is options expiration week. And remember, the Fed is not going to roll over and play dead here. They're just not. They're going to do their best. And that's the only thing you have to remember here is that do the markets have a little bit more downside in them? Possibly, yes. But remember, with options expiration week, you have to figure out the markets will go in the direction where there's least resistance. Meaning, if there's too many puts in this market, then it's going to float sideways to up. If there's too many calls, it'll probably come down. Right now, believe it or not, from what I see, there's a lot of puts in this market, which makes me hard pressed to believe that the market has a lot of downside here. And then next week is Thanksgiving. You know the volume is going to be dead next week. Again, very, very quiet. That probably yields a neutral to upside bias. So again, it's a very interesting little area of time we're coming into. You have options next week, then you have the holiday of Thanksgiving. Again, a little on the harder side to imagine they'll really take this market down. Again, do we think that a near top was put in last week with the cycle date? Yes, we do. But again, you have to remember they could easily float this thing back to a double top or in that range, even taking it out by a little bit as they did in April when the April high was made. So stay tuned. You want to be inside of that research center to get all the inside scoops on what is going on. Again, CAT bought out BUCY. Take a look at that. Trading at a beautiful premium. Whenever you see a stock going sideways like that in a tight range all day on a huge gap up, most likely it's a buyout. That's exactly what happened with BUCY. And again, we'll go to some key stocks here. Let's go back to the intraday on the SPY. Nice little sell here, but you're right into support on the SPY. By the way, if this were to break, then you're actually looking for a little bit of a down move to the 50. But again, it's hard to believe that this will break based on the volume. Volume is very light at this point in the day, folks. All right. The other thing I wanted to mention is the strongest sector today is definitely the financials. Goldman Sachs today up $2.41. Look at the move up today, basically negating the entire move from Friday to the downside on that stock. This will definitely be a little bit of a resistance area, possible scalp shorting opportunity as well on Goldman Sachs. JP Morgan, look at this, even above Friday's highs. Again, Friday was the big down day. We're above those highs today, as you can see. So that tells us that the financials are leading the charge here. A lot of this could be POMO related as they're infusing a lot of money into these big banks. That's helping the big banks in their outlook. They have more money to trade with, to manage, and again, can probably make more money by doing this as well in the scheme of things. All right, so that's a very nice move. Bank of America is up 7 cents. Not as big a move here, but Wells Fargo, take a look at this, up 50 cents. It's a very nice move, essentially taking out the highs and gap fill right here before Friday. And again, you can see that was great resistance. By the way, where would you have shorted Wells Fargo today? Right here. Why? Because it was gap fill. Gap fill is always going to be a good shorting opportunity. There are shorts everywhere, every day. There are longs everywhere, every day. You just have to know the levels, and that's what we teach in the research center. That's what we call in the chat room. And again, it's up to you to learn it. We'll teach it. We're more than happy to teach our proprietary methods. It's just up to you to learn it. So take advantage of that, folks. And again, it's time to understand what's really going on in this market. Start to make the maneuvers that can basically win out and make you a millionaire, a billionaire, whatever you want to become. If you study hard enough, you can succeed in the trading world. Just a couple other stocks on the move here. This is a stock that I told the chat room I picked up about 2 weeks ago, I would say. 2 weeks ago, I picked up FFI, Fortune Industries. They profitable company low under the chart here. Today, I unloaded that at 39 cents from an entry of 28.5 cents, about a 37% gain. And a good job to the chat room, those of you that picked that up. Nice pop today to the upside. Some other calls in the intraday stock chat today as well. Decent scalping. I have to say early in the day, especially better scalping. Now it's getting a little bit on the slower side, but that's okay. Let's take a look at a couple of these other stocks. Apple Computer today up 44 cents, so a little bit of a gain on Apple. Almost looks like a little bit of an M top. You broke the 20 here, which is actually bearish, but you have not confirmed yet. However, on Amazon, take a look at this. Amazon.com, folks, down almost $5 today. Again, a lot of competitors offering free shipping, and that's putting some extra pressure here. But bottom line is, it closed below the 20 here on Friday. It's continuing and looking like confirmation today. Again, target is right now the 50 moving average right down here at around 158.5. If it takes out the 50, then it's going down to this level right down here at 152 on the daily chart. So Amazon under a lot of pressure today. Google's also under pressure today. Take a look at Google. Google's really fallen quite a bit. Interesting to note here on Google. Let me just erase some of these lines that we've been talking about over the last so long. But you can see right here, you're coming into gap window. There's a lot of support right here. If this gap window breaks, you actually have a long way down all the way to the 50 moving average before support comes into play. So just be aware of that on Google. Good fall on Google today, down $6.50 on a market that's neutral to positive. Not a big up day in the markets by any stretch, but just a solid positive day on the back of a mega drop on Friday. And again, it was very interesting on Friday to note that the Federal Reserve could not stop that fall. It's great to see. You don't want to have a market that's totally manipulated 100% of the time. I'd say about 90% of the time right now it's manipulated, but it's up to us to realize when volume increases, when there's too much of a surprise out there, the Federal Reserve cannot hold back and prop the market up all the way. Alrighty, folks. come back. You want to get involved in that research center. We're going to be giving out some more plays over the coming days. Be ready to take advantage of them. On the long side, on the short side, doesn't really matter. As if there's a play there, it will be found. Take care, folks, and again, see you soon.